Então, como a tarefa é muito difícil, eu vou falar em inglês. Não antes de agradecer a Denise e o Sebri pelo convite. I'm going to speak in English, and I will be speaking in my personal capacity in the sense that what I say doesn't necessarily reflect the views of the OECD. Hopefully they reflect my own views, because I arrived this morning at 5. So there are many questions which are asked indeed in this session, and I just took some of them from the outline of this session. And I highlighted in red. Everything, by the way, will be available online, and my email address is there, so if you need the presentation itself. I have many slides, and since I have an autocratic chair, I will be very, very fast in my presentation. So many questions, and I will try to answer some of them based on two papers that I published last year. One is called The Chinesization of Africa, the case of Angola, written with Renato Aguilar in Gothenburg, and the second one is New Multinationals from Emerging Asia, the case of national oil companies, which was published in the Asian Development Review, which is the journal of the Asian Development Bank. And in this paper, I cover 6 companies, 4 which are excluded in this presentation, which are Eni, Petronas, ONGC from India, and Shell. And I will focus on CNPC, the China National Petroleum Company, and Petrobras. Why am I studying this? Well, because there are a number of different reasons why the oil industry is so interesting, and why in particular China and Brazil are so interesting. Here you see some of the reasons. I would like to draw your attention maybe to one in particular, which is that when you analyze international business, in a way, in an historical perspective, in a way, the first big industry you find is oil, and if you look at modern international business, the first multinationals in the early part, the late 19th century, early 20th century, many of them were in the oil business. Another reason, of course, is that in the oil industry, both for China and for Brazil, is a very important one for outward FDI. Here you see the numbers for China in 2006, the industry composition of outward FDI, and you see that mining, which also includes oil, is the largest one and accounts for 20% of the stock and 40% of the flows. But if you look also at Brazil, you find something which is slightly different, as you can see, because the percentage is much lower. But still, if you exclude all the activities related to financial services, which means in many cases holding companies which themselves have industrial activities, still the oil industry is very important. Some oil global trends, and here I would like to draw your attention maybe to, well, basically to 3. The first one is that oil is different from many other commodities in the sense that it's mostly consumed in zones other than the producer zones. So most consumption takes place in places which do not have oil. Now, the places where you find oil, on the other hand, are very difficult places. And this is what Paolo Scaroni, which is the CEO of Eni, the Italian oil company, say you don't find oil in Switzerland. It would be much easier if you find the oil in Switzerland. Now, then, of course, there is a question whether Switzerland would be a different place if you had oil. Maybe it would be like Saudi Arabia or Angola, but that's a different point. Much colder still than Angola. And the third point is that when prices go up, as they have gone up over the past 15 years or so, everyone wants to share the bonanza, and that adds to the uncertainty which surrounds the oil business. As you can see here, in terms of production and consumption, high-income OECD countries are those that record the largest surplus, and the rest of the world, this is 2005, with the exception of Asia, they record a surplus. Asia is changing from an oil-abundant region to an oil-scarce region, and this comes combined with the fact that most oil is in the hands of national oil companies, i.e., companies which are owned by the governments of the countries. And here you see that basically 70% of oil reserves are in the hands of Middle Eastern national oil companies. As I say, the oil is not found in Switzerland, but it's found in very risky political environments. And here you see this is a simple index which I computed with a colleague at the World Bank, multiplying the share that each country has in global oil production with the associated risk on a 0 to 100 scale. And you see that political risk of producing drilling oil has increased very markedly over the past 20 years or so. And probably it has increased even further if we extend it up to 2009. And the trading is also, this is very important when we go to the case of China, trading is also very risky because, as you can see, a lot of trade takes place either, well, mostly between Asia and the Middle East in areas which are pretty risky from the political point of view. Zooming in on the case of China, you see that oil demand and domestic supply have diverged over the past 10 years or so. Demand used to be more or less in line with domestic supply, but since 1995, net imports have skyrocketed. And the projections are that China will keep importing more and more oil and will become more and more reliant on some overseas sources of oil. In the case of Brazil, the situation is very different. So the aim of this paper is to compare India, China, and Brazil, and in particular these two companies, and see what implications, the differences that they have for our analysis of African development. So China is oil scarce. In the case of Brazil, even without the pre-sal findings, you can see that the trade balance has become, over the past few years and even over the past few months, has become, even if just by a very small margin, Brazil has become a total oil exporter. If we look at the companies, here we can see, here I have also the other companies which I examined in that paper, but you see here that basically in terms of total assets, these are PetroChina, which is the listed cousin of CNPC, and Petrobras are more or less of the same size, which is an important point in light of what was said before by Renato, which I fully agree with, that Brazil and China are on a different scale when you look at their investment in Africa and their activities in Africa. But if we zoom in on the case of one particular company or two particular companies in one particular sector, you see that these differences kind of disappear. So basically they are pretty similar in terms of assets, revenues, and all the rest. And they are also similar in terms of oil production, again, looking at before, and oil reserves, looking before the pre-sal findings. They are very different, on the other hand, in terms of corporate governance, because in case of Brazil, you have a company which is partly privatized. The state, the treasury, still owns 32%, the treasury and BNDESPAR. They own more or less 33% of the company, whereas in the case of China, even if PetroChina is listed in Hong Kong, CNPC is still a state-owned enterprise. Here you see that the Petrobras shareholder base has changed markedly over the years. So this is, even if the government still maintains control, this is, I guess, the closer you can get to a public company with widespread shareholdings in the case of Brazil. What they're also very different is in terms of technological efforts. As you know, Petrobras has won twice the global offshore drilling award. It's the only company overall, including OECD-based companies, that has accomplished this. And here you see, for instance, the numbers of patents granted by the U.S. Patent Trading Office in the U.S. The number of patents, 172 for Petrobras versus just 9 in the case of PetroChina. So this is important because in terms of the potential for technology transfer, of course, this is very different. You see in terms of gross global operated deep water production, Petrobras has 22% of the global oil which is produced offshore and in deep waters. So a very important share, and the same in the case of operating vessels. So this is, I guess, the closer you get to a national champion in the case of Brazil is Petrobras, a very technologically advanced company. over the past few years, a number of important international trends are clear in the international oil market. And if you look at the case again of CNPC versus Petrobras, you see that in terms of transnationalization, which is an index which is computed by UNCTAD annually, the Petrobras is much more transnational, much more international than CNPC. So again, if you look also at other indicators like foreign ownership, which is another indicator of internationalization, obviously it's 0 for CNPC and it's 37.4 for Petrobras. So Petrobras is much more international. At the same time, Petrobras still produces most of its oil in Brazil, 93%, versus 78% for China, national petroleum company. So you have a company which is less internationalized. At the same time, it's a company that, since there is no oil to be found in, or little oil to be found in China, has gone overseas to find it. And unfortunately, we don't have the split up, so we don't know how much of this CNPC oil is produced in Africa, but we suspect that it's a pretty important share. Why the companies from these two countries, but more generally the international companies, have gone to Africa? The main reason is that in a way, paradoxically, in view of the concerns that are often raised about the business environment in Africa, and especially sub-Saharan Africa, actually, in the case of oil, Africa is pretty much open for business, because you have either the full international oil company access or other forms of access. The shares is much higher there than in other regions. The second reason is that for some of the factors that were alluded to in previous presentations, Africa is a place where the political relationship between, on the one hand, the African countries, on the other hand, Brazil, China, but also other emerging nations like India, obviously, but also like Russia and others, are very, very well developed. And I mean, we heard about this emerging practice of the Chinese authorities going in January each year going to visit a number of African countries, but as you know, President Lula has also increased the frequency of his own visits to Africa. The result is that now Africa provides 1/3 of crude oil imports for China, and in particular, Angola is the country where, in terms of export, I mean trade, most of the actions takes place. And it's important to see this because Sudan is also very important, but it's still much less important than Angola. But the situation is different than if we look also at the destination of exports of oil by oil-producing countries in Africa. You see here that also China, of course, is also very important. It's by now the second largest destination of Angolan crude. The US is still much more important. So many people just tend to think now that Angola is mostly a Chinese story. In fact, it's also an American, a Portuguese, a French, and to some extent also a Brazilian story. The Chinese national companies are investing in many different geographies, but the value of their assets in Africa lags well behind that of other firms. Here you see, in the case of companies like Shell, like Total, like Eni, now also Repsol, they have reserves, they have secured their reserves in Africa, which are much larger than the Chinese national companies. They are obviously also small producers in Africa. And the important thing here is that most of its production takes place in Sudan. So Sudan is the second largest source of African oil for China, but it accounts for 80% of the oil which Chinese companies produce in Africa. So basically, most of the oil that goes from Angola to China is produced, as a matter of fact, by other companies. This is very important in terms, again, of the implications, but also in terms of the sensitivities.